Hi, Tim Kerin here from Mortgage Choice in Kingsley. There's a lot of talk at the moment about interest rates moving up, and I thought it would be helpful to clarify a couple of things. The first thing I point out to anybody at the moment who asks me what they should do about variable rates going up and whether or not they should fix is that variable rates still have not yet gone back up to where they were before COVID. So if you thought the rate you got on your home loan before COVID, in the year or two before COVID, was a good deal, the first thing to do is recognize that your rate dropped since then and it's going back up again. And if it went up by another 0.5% next month, for example, that's what it would take, very roughly speaking, and it depends on individual circumstances, but very roughly speaking, it would take another 0.5% rate rise on top of the 0.75 we've seen in the last 2 months from the Reserve Bank, just to get back to about where it was before COVID. That's very rough, but that's about right. So rates have gone down since COVID and now they're moving up to where they were. And most of the talk in the market at the moment is that maybe there's a bit more of an increase beyond that. But what that would mean is we're getting back to being what people thought was a good deal in about 2018. So I don't think it's worth panicking too much, because when you borrowed money in the first place, we would have had to prove that you could afford rates to go up from what they were by 2.5% or 3%, depending on when it was done, because the rules did change. So that's 2.5% or 3% increase on what the rates were before COVID, and we're not even back to where they were before COVID yet. What can you do about it if you still don't want to deal with that interest rate rise? Well, in theory, you can fix, but what's going on at the moment is fixed rates are already a lot higher. So for example, I was talking to a customer today who got her loan a few months before COVID hit at 3.18%. Rates dropped since then, and her rate dropped. And today it's back up to 2.7. Another 0.5% rate rise would take it back to roughly where she was before COVID. For her to fix at that lender, she would have to pay for 2 years, for example, 4.99%, so basically 5. So where she's at 2.7 at the moment, she would have to pay 5% to fix. And that's a fairly good example of what's going on generally in the market. Fixed rates are a lot higher than variable. And so what most people are deciding when they work through those numbers is that fixing is a very expensive way to deal with what they're expecting variable rates to do. Now, variable rates, we don't know how far they're going to go up. But if you think about what you are hoping they don't do, what you're expecting fixed rates to do in a worst case scenario, most people doing that think maybe another 1%, maybe another 1.5% on top of what we've got at the moment. That might take you to 4.5% or something. That's still less than what you can fix at right now, generally speaking. So most people are deciding that fixing is too expensive to solve the problem they're actually worried about. So that's the first thing. The other thing I think is to quantify what a rate rise would actually do to you. So if you owe $100,000, for example, and your interest rate's going to go up by 1% based on what you're trying to mitigate, what you're hoping doesn't happen. Let's say you're hoping that rates don't go up by another 1%. How would you actually be affected if rates did go up by 1%? Well, if you owe $100,000 and the rate goes up by 1%, you're going to be affected by 1% of $100,000 each year, which is $1,000. So if you've got a $100,000 loan and rates go up by 1%, that's going to affect you by $1,000 a year. So think about your loan amount and the rate increase you're worried about, and see in dollar terms what that actually means. Most people, when they do that, find it's not as bad as they're expecting, because that's a bit different to what it feels like when you just read a headline about all of the doom and gloom that's going to happen. So I hope that helps, and if you want to drill down into the details of your particular situation and what rates are available to you and what we can do about it, that's exactly what I'm here for. So please give us a call or book an appointment or send me an email, and I'll do whatever I can to help. Thanks very much.